Welcome once again to our university education. Today we're going to look at gains and losses, part of our Forex basic education. As always, a reminder that trading involves risk. One should be prepared to manage that risk in first practice trade or virtual trade in your demo account to gain experience and to understand how the markets work before going live. Also important to remind you that we are not financial advisors. So when we talk about pip changes, this is really where you're making or losing money, depending on whether that is moving in your direction or against you. So if you trade Euro USD and it moved from 1.1476 to 1.1486, that is what in terms of gains in pips? Well, the first decimal point is moving one pip at a time. So 1.1477, 78, 79, 80, 81, 82, 83, 84, all the way up to 86. So you can see this went up 10 total pips in value. It went from 114.76 to 114.86. So the gain of 10 pips in this currency pair. If Aussie USD moved from 70.85 to 70.70, what was the gain or loss in pips? Well, in this case, it went from 85 to 84, 83, 82, all the way down to 70, so that is a 15 pip loss. This was a 10 pip gain. This was a 15 pip loss. Now, that doesn't mean that you made or lost that amount. It depends on which side of the trade you were on. You could be long or short. If you go long a currency pair, you want its value to go up. If you go short a currency pair, you want its value to go down. So we could have made money in both of these trades. If we had bought Euro USD and it went up, we made money. And if we had shorted Aussie USD and it had gone down, we would have made money. We'd have made a 15 pip gain on the currency losing 15 pips. Now, that sounds wacky to people when you first teach it, but that's the two strategies you can do. You can go long a currency pair or you can go short a currency pair. You can bet on its value going up or you can bet on its value going down. And if you get the right direction, you make money. If it goes the wrong direction against your trade, you lose money. So what you make or lose, though, is dictated based on your position size. For example, what would we make if you bought a pair that went up 10 pips? So you are right about the trade and it went in your favor 10 pips. Well, with a 100,000 position size, every pip, like we taught last class, every pip is worth about $10. So we made $10 on the first pip based on this position size, and it went up a total of 10. 10 times 10 is $100. If you trade 100,000 position size and it moves 10 pips in your favor, you're up $100. But let me remind you, if it had gone 10 pips the wrong way, you'd be down $100 in that trade. What would be your loss if you bought a pair that went down 10 pips, but you bought 10,000 position size? So notice you're in a smaller position. You bought 1/10 the size. We know that every pip for a 10,000 position size, every pip is worth about $1. So we lost 10 pips times $1 each. We're down about $10 in that trade. What if we had bought a 1,000 position size and the pair had gone in our favor 50 pips? Well, at a 1,000 position size, it's only 1/10 that size. Every pip is worth 10 cents of value. So at 10 cents of value times a 50 pip gain, 10 cents times 50 is $5. So we would be up $5 in this trade. Yes, it made a lot of pips, but we had a small position size. So this references the money that you can make or lose. The bigger the position size, the more money you can make and the more money you can lose. Smaller position size, less risk, less reward. Very much a small position size, a lot less risk, a lot less reward. Traders will typically start smaller, and as they build consistency and profitability, they will increase their position sizes over time. Starting small is a very wise decision when you're first starting out. Different brokerages will refer to lot sizes in different ways. When you use the MT4 platform and you're putting in your position size, understand that if you put the position size at 1.50, that means you're trading 150,000 position size. So every pip would be worth about $15 at that position size. If you trade a standard lot, it would be 1.00. That's a 100,000 position size, and at that position size, every pip would be worth roughly $10 of value. At 0.50, you're trading 5 mini lots or a 50,000 position size. Every pip would be worth about $5 of value to you. At 0.3, you're trading 30K position size. Every pip would be worth about $3 of value. At 10.10, you're trading a 10,000 position size. Every pip would be worth about $1. At 0.05, that's a 5,000 position size. Every pip would be worth about 50 cents. And then finally at 1K, or what we call a micro lot, every pip would be worth about 10 cents of value to you. So again, traders typically start small and they work their way up from there. Different brokerages will have you put in your position size in different ways, but go in there and practice trade and look at how when you trade bigger position sizes, you're making more and losing more. And since it's in a practice trade, a demo, it's not real money, but you'll learn from that, trade smaller position sizes, and again, it will show you the value change is less or more depending on your position size. So, hope that's helpful. Have a great time with it. We'll see you next time.